Hey, yo, what's poppin', man? You gotta stay hydrated at all times. Yo, what the hell is poppin', fool? Hope you guys have been well. And yeah, that's basically it. So if you guys haven't already followed my Telegram, first link, let me bring the mic up a little bit more. First link in the description is the Telegram channel, AKFX. If you guys want to go and support that, you may do as you wish. So yes, we will be talking about the recent trade that had actually been shared to AKFX, the public Telegram channel. And that was a Euro USD sell. Now, what I will be covering, very simple. So let me just show you guys exactly what we will be covering and then what we're going to do. There's a new format that I'm trying, guys. So like in the beginning of the videos, I'm going to show you guys what we're going to talk about, what we're going to cover in this video, and then we'll actually get into the breakdown. I think that's pretty organized, right? I think that's pretty a good flow. All right. So the things we're going to talk about is, of course, just simple, strong highs and, just structure. Consider that a structure. We're going to, of course, very important, talk about liquidity. What else are we going to talk about? We're going to talk about timing as well. Again, guys, when it comes to timing, there are a lot of mechanisms and approaches to identifying the right time to enter the market or the most optimal time to enter the market. In fact, there are methods besides smart money or what ICT teaches that can constitute the right time to enter the market. But what I'm going to be focusing on are the YouTube shared pieces of education and knowledge that has been shared on, for example, the Inner Circle Trader channel, friends of mine that have studied with studied ICT methodologies and smart money methodologies, just the basic yet very vital and important methods to price and time. So yes, we'll be talking about timing, and to be very specific so that people, don't think I am trying to cheat them out of something, we're going to be talking about kill zones. And that's very important. Okay, so timing, so we have structure, liquidity, timing, which we were talking about, kill zones, and of course just the simple old entry drills, right? Just a simple old what do you look for, pattern recognition is what a lot of people call it. Okay, pattern. So yeah, it's just, again, the pattern is just a QM, nothing else that I personally look for. There have been certain other ways that I've entered, for example, correlating the divergences between DXY and Euro USD. However, that's not something that I do often. I have used it, but it's not something that I do often because I have not exactly learned how to optimize my risk to reward in those kind of scenarios. So what do I use when it comes to Euro USD, or really when it comes to smart money techniques, is just these, guys. So structure, very, very important, the backbone of it all. And then liquidity, which is just giving you the reason in itself to enter. If you just have structure with no liquidity, there's no point. Similarly, if you just have liquidity with no kind of structural understanding of your targets, etc., there's also no point of that. But again, I'm not trying to tell you guys what makes sense or what doesn't. I'm just telling you guys what makes sense and doesn't to me. Then, of course, we have timing. Now, when it comes to kill zones, guys, again, if you guys want to get into the actual breakdown, I strongly recommend you guys to scroll past this bit, because I'm going to be talking to you guys a little bit about these four. But again, if you guys want the breakdowns, just scroll. There isn't anything, you know what I mean? Just scroll on. So when it comes to timing, guys, the benefit of utilizing kill zones, my recording, right, is that it adds a sense of discipline to your trading. Now, how does it add a sense of discipline to your trading? Well, how's it helped me? Well, whenever I decide to use a kill zone, okay, now, as you guys know, I'm very flexible with the way I trade. But when you guys are just starting out, it is very important to not be very flexible with your trading plan. What does that mean? It means don't try and incorporate everything under the sun. The reason I say that is because when you incorporate everything under the sun and you're just starting out, you don't have, I'm being very frank and straight up to your face about this, you don't have the same understanding of each of those individual components as, for example, someone like me or the tens of thousands of better traders than myself. You don't have that same fundamental knowledge. So, for example, if I'm trading kill zones and I'm just starting out with smart money concepts, I'm going to just focus. The first thing, like the thing in my trading plan is going to be only trade during kill zones. For example, I'm just giving you an example, right? Now, what does that do to someone's psychology? That's good. That's very good for your psychology. Reason being, right, you are only trading during that small window of opportunity. Now, you may be wondering, well, that means I have very few opportunities. Not necessarily. Actually, not necessarily, because when it comes to your kill zones, again, this is more into the details that I won't be covering in this video. You have your open, you have during, you have the session itself, and then you have the closing. Each of those three components, the open, the session, and the closing, have its own criteria, have its own context that may or may not play out, or is more likely to play out during those times. So without confusing you guys, as I said before, the importance of incorporating kill zones into your trading plan, especially when you're just starting out, is so that you're not trading every time, so that you're not trading everything you see. You're only trading during that specific time, and you have context, and the context being structure and liquidity, to couple in with the right time. And of course, besides the entry drills, we have QM. That everyone knows what a QM is. If you don't, please go ahead and watch some videos on it on YouTube. Watch the first ever video that I've posted on this channel. All right, so let's get into the actual breakdown now. So we're in what, 5 minutes? Yeah, there we go, 5 minutes, 6 minutes. Okay, so what exactly is the reason for, before I go over the sell, what exactly is the reason for the buy? Again, we're stuck in a range, aka my favorite thing to trade is ranges, because I'm an intraday trader. I prefer intraday trades over scalps or over swings when it comes to smart money concepts, and I find it very optimal and very fruitful actually to trade within a range. Now, what we can see for the reason of this buy, very simply, I didn't take the buy trade, but I did take the sell, but I didn't take the buy. Now the reason for this buy is we have this guy taking out this liquidity, breaking the structure. Very, very simple. Now, what's the reason for us to even, okay, we have all those are very strong components, sure. But what other piece of context can we add? The inducement, liquidity, right? So we do not expect to keep on buying up in here. We expect price to come in, manipulate these lows, and go up. You guys know this is very basic stuff we've covered too many times, one too many times. And of course, on a lower time frame, when we go, we can check out what exactly happens in here. So again, that was a H1, I believe, a H1 or H4 view. I can't really remember, but we have ourselves a lower time frame. So then price comes inside, gives us a bullish QM, manipulation, break of the structure. If this is not too clear for you, then this definitely has to be clear. If you can't understand this as a structure break, you need to really practice and backtest. Then again, when it comes to your context for this entry, the inducement, we have a beautiful support and resistance. Not initial, I believe it was POI, was it? No, it wasn't, my bad. It was initial. It's been a while since I've used TradingView, guys. I apologize. There we go. We have that SNR lick. Again, SNR lick is just an approach. It's just a way of identifying. So we have ourselves a liquidity, price comes inside, boom, she goes. Okay, cool. Understandable. That's the reason for the buy. What will you be targeting? Well, you could perhaps, once you take this entry, maybe this is going to be your first target. Why? Strong low, weak high. Excuse me. Your next target can be these equal highs. See this high? And this another high. That is an equal high. Okay? And maybe your next target is this one. So for example, I'll just give you a very brief example. Here you could take off, maybe you are a scalper. Maybe, right? Maybe you're a scalper. You take off 50% of your profits here. You take off another 50% of your profits here. Maybe you're done for the day. That could be all that you trade, guys. Again, I'm tailoring this back and back and back into the importance of a trading plan. If all, you know what I mean, like all you've tested is, oh, I buy here, for sure I'll take my profits here. But you don't know whether that's optimal for your psychology, then I mean that's not very good, is it? You're not exactly being very efficient with the way you're trading. So figure out what works for you. For example, if you're taking 50% here, another 50% here, and that's it, you're done. You're done for maybe the week. Who knows? Maybe your weekly target is a percent R. Maybe your weekly target is a couple of pips. That is up to you, but stick to it. You know what I'm trying to say? Okay, so we found out the reason, right? The reason I want to say it. We found out the reason for, this buy over here. This wick took out the liquidity, very important. So we have ourselves a manipulation, a break in market structure, and inducement upon the return. So we expect the inducement to be taken upon the return into our strong low, or the low that was responsible for manipulation. And of course, why do we even look at this low? Because we also broke structure. You see, very important components: liquidity, structure, liquidity, return, boom, we go. You see? Okay, now with that in check, I think we're about 10 minutes in. Yes, we are. Let's get into my sell itself. So my sell, first thing I'm looking for, if I'm looking for a sell, just a different approach to you guys. Maybe this stays with you in your minds a little bit better. I look for what high, because I'm looking for a sell, so I'm looking for a high to sell from. Am I right? I mean, I'm looking for a high to sell from. Simple as that. What high has been responsible for a manipulation? First of all. Secondly, after that manipulation, did that high break structure to the downside, right? So basically, in simple context, all I'm telling you guys is this. Where's the thing? There we go. Okay, we have ourselves a high right here that's responsible for the manipulation of these guys. Am I right? See this high responsible for the manipulation of these guys. Okay, drew that wrongly. Okay, let's say this one over here. See, okay, let me go back. I'm sorry, man. I'm sorry. I don't have chai today, you know. So yeah, okay. This high is responsible for the manipulation here. Then is this high responsible for a break of structure? Yeah, it is. It is responsible for a break of structure. Now we can expect a bounce to go up here. Why? Because this low took the liquidity from here, broke this structure here. See this high? Broke this structure here and left this as an inducement, and perhaps that could be a reason why price is going up. Will I take this trade? No, because I'm looking for sells, right? That's my context. I'm looking for sells. So we know that this high took liquidity, broke the higher low that caused that manipulation. Very important. All right, and now we're looking to sell this guy where I'm pointing, right? We're looking to sell in here and target where? Target here first, right? And that is what I'm looking for. So again, one more time, I'm looking for the high that was responsible for a manipulation. So did this high go and manipulate these guys? Yeah, it did. All right, secondly, did that high then go and break structure? Yeah, it did. And now I'm just waiting for a return. You see, when people complicate things, but they understand it, that's fine. That's called optimization of your strategy. But when you complicate things, but you fail to understand the bare bones basics, that's where you lead yourself down a very bad hole of overcomplicating and adding complexities that were never necessary. Let's put it that way. Adding complexities that were never necessary to you because you haven't even understood the basics. So when you're adding complexity after you've understood the basics, that's good. That's called efficiency. That's called optimization. Okay? So what I'm trying to say by that is keep things simple, especially in the beginning. Because once you keep things simple, that is how you can very efficiently upgrade and upgrade and upgrade your knowledge. Right? So, okay, let me get back to this though. So let me go and tell you guys what I saw. I saw, see where my cursor is, this high that took this liquidity. Was it a significant liquidity hunt? Well, it wasn't significant, but it really depends on your perspective. It really depends on your perspective, because to me that took liquidity. That's the reason why price went up, and bam, she freaking dropped. You know, it took the liquidity still. Was it something as significant as, say, this guy who just completely ran through? You know what I mean? A couple pips above. Yeah, it's significant. 7 pip run through of the stops. That's significant, yeah. But I mean, I've seen takes on liquidity that wasn't exactly also impulsive, but the move still played anyway. So really, it comes down to your perspective and comes down to what you're looking for in your trading plan. So for me, as I said, guys, I try my best to know a lot, but yet I always keep it simple when I actually trade. So I'm keeping it simple. This high got manipulated, done. I close my eyes and I know this high got manipulated to me. That's okay. I know it's done. That's it. Keeping it simple. Another thing I can see. What's this then? Isn't this the low, the low, see how I do it? The low that caused this manipulation. Yeah, it is. It very well is. And if you can't see that so clearly, that's okay. We can go down to a lower time frame. Let's do that. Go down to a lower time frame. And you can clearly see that was the low I marked on the H4. But if you go to the H1, is this not the, look, okay, watch this again. Watch this again. Low. Okay, watch this. Give me a second. Low. Higher low. Higher low. That caused the manipulation. This is the manipulation here. It caused the manipulation. So, again, nice and easy. Simple. It caused them. This high took out this stops. Okay, but what caused that high though? This low. A low has to cause a high, and a high has to cause a low, or form a low. You see what I'm trying to say? So simple. Okay, done. That's it. What's the next thing I'm looking for? Oh, hold on. I'm gonna give you guys 5 solid seconds to figure out what the next thing is that I'm looking for. Okay, now guys, do not, before I just blank out for 5 seconds, right? Do not bother about, oh, there's a buy here. No, we are talking about the sell. We've gone over the buy. We've gone over why there was a buy here. Let's talk about the sell. Focus your minds on it, please. I found the high that has taken liquidity, and I found the break of structure. Meaning what? I have a strong high, and I have a weak low. Am I right? You guys are following? Okay. So we have ourselves a strong high and a weak low. A high that's cause manipulation and a high that's broken significant structure. What's the next thing I'm looking for? 5 seconds, go. What is the next thing I'm looking for? That's 5 seconds done. Okay, I hope you guys understood what the next thing is that we're looking for. So, if you guys said that the next thing we're looking for is the inducement, you are absolutely correct. Absolutely correct. The inducement, the first inducement of this range, of this buy to sell range, the first thing that we're going to look at, for me, is this. This bit of liquidity right here. I'm looking not to sell below this liquidity, but yes, I will be looking to sell above this liquidity. Right? And where exactly am I going to look to sell? Well, what I can see straight away is a hidden base. If you want to just go and mark the entire IPA, hey, go for it. Hey, go for it, man. Right? But for me, I'm seeing this first. And all I'm going to do within this area is to go and look at a kill zone. So for example, there's a kill zone right here. Crap. What do I use? Yeah, I use this, I guess. Yeah. So... Sorry, give me a second. There we go. Okay. 7, 2. Shoot. Give me a sec, man. Okay. So you go. There we go. All right. Cool. So 7 to midnight. New York session. I know that New York Open is at 7. And again, I'm just giving you guys information based off of ICT's postings on his YouTube channel, right? But over there is the kill zone, and then you look for your sell and blah, blah, blah. We're not covering this sell, but you get, that's what I want. At least you guys understand what the next step is that I'm doing, which is looking for the liquidity. Man, TradingView is so broken, bro. Seriously. Looking for the liquidity. So price comes in here, it sells off, but unfortunately it doesn't last. But again, as I said, if you look for a QM in here and you sold based off that, let me show you guys the QM. Again, guys, this sell is coming from the H1 IPA. Okay. So if you were to have done a little something like this is an M1 setup, your liquidity would be here. This would be your liquidity. That would have been the sell up there, and boom, she travels. That's where, if you're a scalper, you're just trading that little bit of price action. If you're a scalper, that's where you can take 50% off. Hey, that's what you could do. That is what you could do. Okay, so again, what happens after that basically is very simple. I did not take this other sell over here. I was not looking at the price at all during this time, but that could have been your other sell. Wasn't clean at all to me, but hey, I did know some traders that actually took this sell. Props to you guys. I missed it. Well played, right? But that would be the sell from there. And again, what are you targeting? Strong high, weak low. And if you guys didn't think this is clean, okay, you did not take the trade. So what? It wasn't clean price action. Or do you think the charts are just gonna give you price action that's clean 24/7? No, it's not. That's the fact of the matter. So now that we covered this, 18 minutes, right? Okay, what happens next? On a higher time frame, we still have the strong high, weak low. Now, this high failed to create a lower low. So all this is doing is this. Do you guys see how price does, the agenda bit by bit? Okay, I'm just going to mark this out real quick for you guys, and failure to create lower low. Okay, look, liquidity, manipulation happens here. Then this structure here gets broken. This guy here breaks some of that H1 structure that's within here. See? Breaks the H1 structure. And then this, what I want you guys to focus on is this. High that failed to create a lower low. Look, this one. See? Failed to create a lower low. What would be a lower low? Okay, Avi, what is a lower low? Well, a lower low would be this. Breaking here, breaking these bits. That would be a lower low. That's good. That's what we want to see, but it didn't happen. It's a failure then. So what were my eyes panning to next? Well, very simple. What I can see is an IPA candle right up in here. Now, of course, I could just go with the hidden base. Sure, I could, but I said, what is going to give me the order block or the supply candle that is the highest in the range? The highest in the range. So we have ourselves a range here, the high of the range, and we have the low of the range for selling. Why is this the high? Because we took liquidity and broke structure down. This is the high, this is the low. For example, this, can you see this buying right here? What would be the range for this bullish price action? Well, we have the low of the range and the high of the range. Why is this the low? Because this guy took that liquidity, broke the structure, and formed this high. Low of the range, high of the range, high of the range, low of the range. Sell within that because we're in a range, especially, right? So what I marked, I'll tell you guys right now, was the entire order block like this. Why did I mark the entire order block? Because it gave me, right, a zone. 30 pips is great. A zone that is more refined than if I were to have a zone like this, and that is more refined and higher than if I were to have a zone like this. Because what if price, like, it just goes up a little bit more? So I said I'm going to take the higher bit, which is just the order block here, or the supply candle, because it's marked the same way, or at least I mark it the same way, and I'm going to observe price action within here. And so what I saw was very simple, man. I saw this actually the previous day, on Thursday. I saw that price installed a high in here, and I'll tell you what these guys did. They just never took the high. They've just completely ignored this high. So I was waiting. I was like, okay, they've installed a high in there. They've never broken a single bit of structure, right? And I said to myself, I'm gonna wait for this high to be taken and immediately look for a lower time frame sell opportunity. They went up there. I was like, oh, it's gonna be good. It was during like a London session or something as well. Yeah, London session starts for me 2 p.m. Malaysian time and lasts until 5 p.m. Malaysian time where it closes. Now, this 2 to 5 p.m. Malaysian time just translates to 2 to 5 a.m. New York time for the London close, on the London open and the London close, right? They just didn't take this liquidity. So I was sitting on my hands. I didn't take this sell. I didn't take this sell. None of that. I didn't take this wiki sell. I never took any of that. This is something that comes with time. The patience aspect of traders, I can see severely lacks when you first start out. And that's okay. That is normal human behavior. Okay. But as I said, it's very important that you are patient, because all I was looking for was for price to take this liquidity. Now, why? Why was I looking for price to take this liquidity? Why not just sell the structure, right? Just sell the structure. Well, let's go ahead and take a look at the structure. What the hell? Look, let's take a look at the structure on the 5 minute. Do you see anything at all that I could have done on the 5 minute time frame? Price literally did this. See this? Price literally has done this. What can I do? I'm not looking to sell in here. Here on the M1, yeah, sure. This here was an M1 opportunity. For sure, I agree with you guys. But I didn't want to look at that. Okay, see, if I were to go to the M1, I'll show you guys. Right now, I'm going to the M1 and I'm showing you guys the M1 opportunity. All right, so price is, again, guys, all of this is trading within that H4 order block or supply zone that I was talking to you guys about. Okay, so we have ourselves the run on liquidity right here. And we have that as our break of structure. And then we have these guys, I would say, as the liquidity. And then we have perhaps an OB. I'm not sure what we have in here. Do we have an OB? Okay, we have ourselves an IPA right there. And that could have been the sell. I didn't take it, but that could have been the sell for that. However, do you see? This is, again, pay attention to price action. This high just, oh, it looks promising, and nah, let's just go up. No, that's not what I wanted to see, right? Boom would have been nice, right, for this sell, but it didn't happen. So now, what did I see? Very simple. Price installed this high here and just never decided to take it. So I have myself an entire build-up of liquidity here. Now I'm going to go to the daily time frame and I can show you that in the form of previous daily highs. Let me show you guys that. That is not good. The previous daily highs, I do not like to sell within that, where we have equal highs above. Again, structure is important. Sure, I agree with you. And that's why we offered ourselves a couple of sells over here. But my whole context was I needed to see that SH, that SH meaning the stop hunt. I needed to see that. There wasn't. I was like, why didn't they take this? So I was like, okay, let's wait until they eventually take it. And if they don't, well, then they don't. Price just didn't deliver as I expected, and I move on. What am I gonna do about it? You know? So what I did was very simple. I waited. Now I'm gonna go to the 1 hour and show you guys. This was Thursday's price action. Thursday rallied up, didn't take that high, fell down. This was Friday's price action. Price rallied up. This was during the London session. So I'm just gonna draw out to you guys the session times. Excuse me. Starts at 2. Ends at 5. That was the London session. And then came in New York. Man, I keep forgetting New York session timings again. Give me a second. Ah, there we go. I like to just draw it all the way to midnight, but actually it would be 7 to 9. Right there. And then 10 to 12 for me, or 10 to 2 a.m. But I like to just generalize it and go right there because I try to sleep a bit earlier nowadays. So yeah, we have ourselves the New York session, and as you can see, during right before the New York session, price came in to take that bloody liquidity. Do you guys see? Now I'm like, whoa. I'm interested to do what? I'm interested to sell, right? And what could I target? What could I target? Price went and took that liquidity. Took the liquidity. What can I target? For me, first one here, second one here. You see what I mean? Now, can you guys have just gone and done something like, you know what, I don't want this top one, I just want this lowest. Do you see this low that caused the manipulation now becoming a target? Do you guys see that? That's pretty cool, right? So can you guys just go and, yeah, I'm gonna target this low? Sure, you can do that. Nothing wrong with that. I wanted to be a little bit more conservative because I went to the movies. I didn't watch Spider-Man, unfortunately. The seats were just fully booked. I could not watch Spider-Man. It's very sad. But those are my 2 take profits for the day. And then after that, I'm done. After that, I am done. So price came and took that liquidity. Now I'm interested, and let me tell you guys what I saw in the lower time frames. This was the point in which price took the liquidity. This high forms my stop hunt on that liquidity. Now, what am I looking for? Guys, what am I looking for? I'm just looking for a break in structure. And I had that here. Now, it's not very clean. You can't see that very clearly here. But I used my MetaTrader 4, guys. And you can check this out on the Oanda, right? You guys can check this out on the Oanda brokers. I'm not too sure why this broker doesn't want to show it, forex.com. But I'll tell you guys what I saw, right, that made me want to place this trade. What I saw was this. Higher a little bit, and then a break, and then a return, right? And then a sell off. So I had this as my first entry. This is what I saw on my MetaTrader 4 broker, guys. Just want to put that out there. So I had this wick be higher than the left, which is what? A stop hunt again. And then we had this being the low that caused the high, gets broken, return, and I sold. That's it. I just sold immediately, right? Once it returned, I sold. Okay. What I saw after that was this. What I saw after that, my friends, was this. So again, this is where the stop hunt occurred, guys. Now I have gotten this question. In the comment section. Is it okay, right, for me to mark the stop hunt just like this? Yeah, sure, that's done. But just remember, it's working because it took this guy's liquidity. That's the context behind it. I hope you guys understand that. It took that liquidity. Now all we're waiting for is this low that caused the manipulation being broken. Done. That's it. Now we wait for, I'm not going to answer the question. I'm not going to answer that question, guys. 5-minute time frame. We have the manipulation. We have the break of structure. What are we looking for next? I'm going to give you guys 5 seconds. We have the manipulation. We have the break of structure. What are we looking for? I hope you guys answered the liquidity. The inducement, excuse me. This high. All of these guys. Trend line, liquidity, all that stuff, basically. The liquidity, the inducement. Okay? So if you want to look at it in the sense of something that is going to make your brain understand it better, well, SNR liquidity. Support, right? Support that gets broken becomes resistance, and then we go and take those guys' liquidity, those money out, and then she goes. You see? So As long, it doesn't matter. You guys want to look at it in that form, or you guys are experienced enough to say, that this is the liquidity. Okay, doesn't matter. You guys can understand that this is the liquidity we're looking for to be taken, right? You are not selling in here. You're not selling in here. You're not selling in here. You're selling above these. You guys get that, right? Okay, then that is all that matters. So my sell was based off of the M15, just like that. Just the M15. You could have just taken it off of the M15 OB, just like that. You could have done maybe something conservative like this. I did it from the M15 and I did 2.5 pips as my stop loss, just like that. Sold here with my stop loss 2.5 from my entry, and I called it a day. The reason I did that was a bit aggressive, to be honest, but the reason I did it just to get some more risk to reward. Now let's go ahead and calculate that actual risk to reward. So oh yeah, guys, by the way, if you want to see actual proof of this entry, it is in the Telegram channel, in the first and only link in the description section of this video. Okay, so as you can see, now I've also shared you guys examples of the 2.5 and 2 pip idea, something like this. 2.5 from the strong high, or if you guys wish to do 2 pips from the strong high, that would have been it. You would have missed it. But if you guys were to have done 2.5 pips from the strong high, that would have been your entry right there. Okay, so anyway, this was my entry, and you guys can go ahead and take a look at the first link in the Telegram channel below for proof of that. 1 to 6, and I take 50%, for example. I'm just giving you guys an example. I didn't do that, but I take 50%, for example. And over here, 1 to 8, I take another 50%, and I'm done. I'm out of the entire trade. I'm done for the day. I'm done for the week, whatever you want to call it. You see how that could just be your model? That's it. This happened during the New York kill zone. This return, happened during just the very start of the New York session. That's it. You're done. That could be your entire deal, my friends. That could be all that you do. It does not have to be complicated. You find out what you want to do. That's it. Okay, so I hope you guys understood this entire setup. And if you guys haven't, watched this video a couple more times. I do not want to make this video too long. Have a wonderful day, and I pray to God that I helped you guys. I feel like I'm a little bit low energy in this video, and I didn't explain things, not that it wasn't in great detail, but I didn't explain these things with different perspectives. But at the same time, I didn't want to put all those different perspectives in and then make this video an hour-long video. It's just a very simple trade. But I hope you guys understood the reason behind my sell over here. And that is it. I hope you guys have a wonderful day. Peace out. Like this video if it helped you, and dislike this video if you don't like me. But either way, I pray to God that I've helped you guys. That's all. And leave a comment if you guys wish to. See you guys in the next one, man. Peace out.